Hi, good afternoon. I'm Craig Finster, President and Chief Financial Officer of Versus Systems. It's a pleasure to be here with you today. Thank you for joining us. I'm going to introduce my friend and colleague Matthew Pierce in just a moment. But first, please register by scanning the QR code on screen because we're going to give away some real prizes today. I'm going to give a quick disclaimer about our discussion this afternoon while you do that. This presentation contains forward-looking statements, including but not limited to statements regarding the plans, objectives, expectations, and intentions with respect to future operations. All statements other than statements of historical fact are statements that could be deemed forward-looking statements. Versus Systems, Inc., we, us, are, or the company may not actually achieve its plans or product development goals in a timely manner, if at all, or otherwise carry out the intentions or meet the expectations or projections disclosed in these forward-looking statements. These statements are based on management's current expectations and beliefs and are subject to a number of risks, uncertainties, and assumptions that could cause actual results to differ materially from those described in the forward-looking statements, including, among other things, general business and economic conditions, including risks related to the impact on our business of the COVID-19 pandemic or similar public health crisis, and the need for and ability to obtain additional financing, the risk that the company's intellectual property may not be adequately protected, and other factors described in the risk factors section set forth in the company's filings with the Securities and Exchange Commission or the System for Electronic Document Analysis and Retrieval, which is what CEDAR stands for, from time to time. The company undertakes no obligation to update the forward-looking statements contained herein or to reflect events and circumstances occurring after the date hereof, other than as may be required by applicable law. Now, with that, I'm pleased to introduce Matthew Pierce, the founder and Chief Executive Officer of Versus Systems.
Hi, I'm Matthew Pierce, founder and CEO of Versus Systems, and welcome to the first Versus Systems Investor Day. I'm going to spend about 60 seconds telling you what we're going to talk about for the next 45 minutes or so, and then we're going to talk about those things, and then we're going to tally the scores, and we're going to announce some winners, we're going to recap, and we're going to call it a day. So remember that you're actually playing for real live prizes. You've got coffee and pizza, and this very stylish Versus sweatshirt, although not the one I'm wearing, it will be another one. They're delightful, very light, perfect for Los Angeles. Fantastic. So, first up, we're going to talk about why we're here. And the punchline of that is that we're here because Versus Systems is building the best advertising system in the world. We're also going to talk about where we came from. So we're going to talk about the past. We're going to talk about Versus history, sort of from the dawn of time into the last 12 months or so. And then my colleague Craig Finster is going to talk about where we are right now today. He's going to talk about our financial position, our place on the NASDAQ, and the effect of those things on our growth. And then I'm going to come back in and we're going to talk about where we're going. We're going to talk about new markets and new geographies, new products, growing revenues, growing the IP portfolio, and growing the user base. And all along the way, we're going to show you why our products are the most effective advertising products for interactive media. We're going to show you why our approach is different and defensible and why it matters. And we're going to do that in part with trivia questions, like this one. So what we're asking you right here is to figure out which one has the most protein, whether it's a handful of crickets, a rat, or a common garden snake. The idea is that you can find your choice animal to eat and consume the whole thing, and how much protein does that have in it. So I'm going to answer that, and then I'm actually going to sit here and watch where the poll goes, and then I'm going to reveal the answer. So I am looking at people choosing. There's a lot of cricket fans out there. And then the garden snake, and then the pigeon. It turns out that the answer is the rat. And it's because the rat is just much heavier than a common garden snake or a pigeon or a handful of crickets. I guess it depends on the size of your hands and how many crickets you can hold in your hands. Those of you that answered cricket are correct on a pound-for-pound basis. So there's just a lot of protein in a cricket, but there's just a whole lot more rat. So the correct answer to this question is the rat, and the correct answer to the question of which one has the most protein on a pound-for-pound basis is the cricket. These are the kinds of things that you can really only expect to learn here at Versus Investor Day. We're going to come back and talk about sort of why this stuff matters, why it works, later in the show. But right here, next time you get asked the question of which has more protein, it's going to be the rat, and pound for pound basis, it's cricket. Good for cocktail parties. In any case, After we've talked about that, we're going to talk about, after we talked about the past and the present and the future of Versus Systems, we're going to answer some questions that we got from our shareholders in the last week, and then we're going to announce some winners, and we're going to thank everybody for coming. First up, why are we here? We're here because the team at Versus Systems is building the best advertising system in the world. That's why we're here. We're making the best ads on earth, and we're doing it without selling your private data. We're doing it without forcing you to watch something you don't want to watch. We're making the best ad on earth because it's based on choice, and it's based on earned rewards. And it works. The key thing to remember here, our absolute North Star, is that we make the things that we're in more fun. Everything that becomes Versus enabled becomes more engaging, whether that's an app, it's a stream, it's a broadcast, it's a television show, it's a game. Everything that we touch is made more engaging. Everything that we touch is made more fun. It is our belief that even if we make them a tiny bit more fun, then people will watch for longer. People will play more. People will remember the experience. Historically, with advertising, advertising causes churn. It makes you hit the X. It makes you get up and get a sandwich. It makes you leave the room. It makes you change the channel. Advertising, only a very, 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 very small percentage of people watch ads all the way through. And that's not good for anybody. It's not good for the brand. It's not good for the content company. It's not good for the audience. So if we can make the ads a little bit more fun, a little bit more engaging, if we can make the content more than it is, then we're going to do very, very well. People are going to remember the experience, and then they're going to go buy things because they have a better relationship with the reward. And the proof of that is in the data. People play like absolute crazy when they can win. When you have an opportunity to earn something, when you have an opportunity to win something, you just play more. And this is coming out in the evidence. Recently, we did the Canelo Alvarez middleweight title fight that was done in AT&T Stadium in Dallas. And leading up to that, we did a project with Keurig Dr. Pepper's brand Crush for Canelo. And people played for forever to win tickets to see the show, to win a code so that they could watch the pay-per-view live. They also played for 2 liters of Crush, and they played for signed Canelo Alvarez boxing gloves. And I mean, in the past, we've had people that played for 26 hours to win a hat. People love winning, and people love the opportunity to earn something. And when they earn it, they care more about it. One of the cool things about what we're doing, one of the things that we like the most, is that what we're doing doesn't feel like advertising. What we're doing feels like prizing. It feels like rewarding the audience. And the audience feels that way too. It's nice to win stuff. It's nice to choose stuff. So let's talk a little bit about who we are and what we do. So we've developed a proprietary platform that allows content creators of any kind to drive new engagement. It gets people to watch longer. It gets people to watch more often, come back and play more often, because the games within their games, the games within their shows, the games within their streams are more fun, more engaging, more effective. We've built a system that allows audiences and players to win real-world rewards inside of their favorite shows, inside of their games, inside of their apps. We've made a better set of products for brands that want to reach new audiences and get them to try their products. It's good for content companies, it's good for brands, it's good for audiences. Versus really is the game within the game in this way. So where we came from, Versus was founded as part of an incubator called O-Labs that was in Los Angeles. The big LPs in that incubator were a very, very large law firm, a large software development shop, and a digital media and talent agency. So the mandate for that incubator was to build things that were taking advantage of the partnerships that we had. So in that way, the mandate was to work in areas that had very thorny legal and regulatory and had very, very difficult technology issues to overcome inside the media space. And the very first product that we built was Versus. We filed a bunch of patents. We had more lawyers than we had engineers for quite a while, because this is actually a really tricky thing to be able to do, and to do at scale, and to do with what we call dynamic regulatory compliance, to be able to manage the regulatory issues state to state, country to country, and be able to manage game to game, prize to prize, delivery type to delivery type. Being able to do that required a ton of IP to be filed, which is now being granted. So we've got more and more patents being granted, which is great. And we then built it out and uplisted to the CSE, and we got a deal with NASCAR Heat Mobile to put it into their mobile racing game. The folks at HP saw what we were doing with NASCAR, and they called us and asked if we could preload it onto their laptop and desktop Omen computers. So we have a multi-year deal with HP. which was an enormous win for us. In the last year, growing that relationship into China, adding performance ads where we get paid when the user actually purchases an item, because we can track all the way to the point of sale in some cases. This is a really important growth in advertising broadly, right? Being able to track transaction rate, which really should be the gold standard of advertising. How many people saw the ad, then how many people did the thing that the ad asked them to do, right? How many people encountered an advertisement and then went and engaged with that product? That's a really important journey, and we can track that, and we can show that, and we can the performance marketing, the performance advertising element of that was introduced last year. And then as all of that's happening, we also made the decision to list on the NASDAQ to level up, to broaden the user base, to increase the liquidity. Craig's going to talk more about that when he talks about the present, but we made that decision about a year ago and went through the entire process to get up to the NASDAQ, which has been tremendously beneficial to us with respect to liquidity and cash position and that sort of thing. And then more recently, the biggest and most transformational thing that we've done in quite a long time, probably the biggest thing that's happened since HP, is the acquisition of Excite Interactive, which we announced last week and which we expect to close in the coming days. The acquisition of Excite is transformational. It's enormous. It allows us to bring our proprietary reward platform to streaming media, to broadcast television, to live events, to reality TV, to scripted programming, to conferences, and to investor days like this one. Being able to include our pricing, being able to include a lot of our reward mechanics inside of the reach that they have. They've got dozens of professional teams that all use various versions of the Zio platform. And the Zio platform is fantastic. What Sean and JR and the team over at Excite have been able to do has been really great. And we're really excited to bring that into the Versus suite of products, to add our functionality to it and really be able to take it to the next step. So the acquisition of Excite allows us to bring engagement and real world rewards to their whole fleet of partners, which include dozens of professional teams from the LA Rams to LAFC, from the Pittsburgh Penguins to the Yankees. Our partnership with Excite is a perfect transition point for us to talk about how far we've come from the beginning. Versus Enabled Zio is a product suite that is perfectly positioned for the interactive media of today and where media is going tomorrow. With that in mind, I would invite you to enjoy some Excite gaming. Excite actually was founded in a universe where they built games for timeouts and for all of the parts of games, live events, where there's downtime to keep the audience engaged. And so they've got over 40 games in their arcade. They've got trivia, they've got predictive, they've got polling, they've got a lot of the stuff that's powering this demonstration. And we would like you to play some skee ball while we present the state of the financials. Remember that the points you score in skee ball and the points you score in trivia are all going to be cumulative to your total. So 5 people at the end of this presentation are going to get pizza or a coffee or this very stylish shirt. So keep playing. While that's loading, I would point out that this is the exact game that the leaders in the Canelo experience played over 2,000 times to win a DAZN code to watch the pay-per-view. So enjoy skee ball.
All right, welcome back. Now you only have to play for 11 hours and 59 more minutes to beat the Canelo leader. That's a long time. As Matthew alluded, we really had a transformational past year, and it culminated in the first quarter with our listing on NASDAQ. This was one of the major initiatives of the company over the past year. You know, what changed with this? Why was this transformational? Let's talk about that a little bit. The U.S. IPO in January resulted in our strongest balance sheet ever, which is particularly dramatic when compared to the year before. On March 31st, 2021, we had $14 million Canadian cash on hand. The previous year, on March 31st, 2020, we had $15,000 Canadian cash on hand. These increased cash reserves enable us to plan longer term and allow us to focus on initiatives that build shareholder value. The other thing the NASDAQ listing did is increase the liquidity in our stock. Earlier this month, our average daily volume was nearly $900,000 USD. Comparatively, in June of 2020 on the OTC CSE, our average daily volume was a little over $100,000 USD. That's a nearly ninefold increase. That increased liquidity allows institutional investors to take positions. We saw that in the IPO with Wasatch Global, now a Section 13 filer, and other institutions participating as well. Coincidentally, we've seen insiders excited by our prospects as well and are actively buying after the recent publication of our financial statements. This increased access to capital allows us to support our growth more aggressively if we so choose. The combination of financial position and liquidity has also enabled us to pursue an acquisitive strategy, and you're seeing that now come to fruition with the Excite acquisition. Speaking of Excite, from a financial perspective, Excite does a couple of important things for us. First, it broadens our revenue model, and second, it increases our access to users. Now we're able to offer software as a service or SaaS tools to content creators and publishers, such as what you see now, and we're able to provide an e-commerce experience without pushing the player or the user to another app and creating a friction that prevents people from buying. We can also offer production alongside our managed services and customization fees, which we've historically charged. We can also, and of course, we'll continue to pursue a transactional model with our interactive advertising units. From these revenue streams, we expect a higher operating margin, given most of our costs are labor-driven and behave in a fairly fixed manner. We plan to talk a little bit more about that when we file the business acquisition report, which includes the Excite financials. That's expected to be within 75 days of closing the transaction. Now, speaking of the future, Matthew's going to come back and talk about where the company is going. But first, we're going to have a little poll and deliver some personalized content for you to enjoy while we trade back.
Thanks, Craig. Now that we've talked a little bit about the past and then how we got here, and Craig gave us a little bit more about the present and where we are now let's talk about the future. Let's talk about where we're going. The answer is that we're growing. We're adding more content types, we're adding more features, we're adding more users, we're adding more brand partners, and we're adding more geographies. So first, we're going to talk about how we make money, sort of the three tiers of the revenue pyramid sort of going forward. We're going to talk a little bit about how we make better ads. It's not just for games, it's for streaming, it's for all kinds of broadcasters. So being able to place this Versus-enabled Zio product inside of streams, inside of team apps, inside of web pages, inside of other experiences where you are encountering your favorite team, your favorite streamer, your favorite program, your favorite show inside of investor days and conferences and things like that. There's sort of three ways that this combined product can make money. So one of the ways is that we have a SaaS element. There's a licensing element. So you can, content partners will pay us to use the system, whether it's for a game or a season or a show or an event or forever. That can be done on sort of a monthly basis. The next tier is sort of managed services and production. That tier is being able to run these kinds of programs. Now this is infrequently done. Partly because Excite, Zio, Versus already have developed a lot of the software that we're going to be using for this going forward. We're going to be adding features, we're going to be upgrading, we're going to be improving it all the time. We're going to be growing to meet additional growing bandwidth needs. We're going to be growing to meet new streaming and broadcast partners' needs. Building bespoke software for that and being able to run these kinds of events is something that we can charge for. It's not something that happens especially often because one of our goals is to build scalable systems and build systems that can be used by anyone. Broadcasters writ large, content creators writ large, not just NBC and ABC and Fox and Discovery and Disney and Netflix and the universe of broadcasters that dominate that tier of the landscape, but all the way down to the entrepreneurs and individual people that are making shows and podcasting and streaming on YouTube and Twitch and TikTok and everywhere else that you're making video content. We care a great deal about that entrepreneurial community. We care a great deal about the broadcaster and streamer community. We want to make tools that are easy for them to use and effective for them and drive additional engagement. I'm really eager to see how our products get used by that community. There's a huge history of innovation in that space where if you give those kinds of broadcasters tools, They invent new ways to deploy them in the service of, selling their sponsors gear, or selling their own swag, or promoting their Kickstarter, or pushing out their Patreon, or getting people just to engage with them more effectively. And I think that we're going to learn a lot as both kinds of broadcaster adopts more interactive elements like Versus, more gaming, more prizes, more of this type of activity that Versus enables. You're going to see real growth and real innovation in both groups, and that's going to trigger a new suite of products. So in one area, we have licensing and SaaS. The next is production and managed services. And then the next, and the one that we think is really going to be transformational to the industry as a whole, is the advertising layer. The piece there, the idea there, is that this is all revenue share driven. So we make money when the content partner makes money. We make money when the advertiser puts their products into the hands of people that use it. The important part here is building products that appeal to audiences, brand partners, and content providers. This does not have to be a zero-sum game. We can make additive products that benefit everyone in the ecosystem, and we're doing it. And it's proven. Like, it comes out in the data. Players love it. Brands get better brand affinity, better brand recall. You remember the things that you played for. You care more about things that you won. And that type of engagement helps brands, and then people play longer. People watch more often. That type of engagement drives the hearts of content providers, from individual streamers, broadcasting out of their house, all the way up to Rockefeller. It's a huge opportunity for broadcasters and game companies and app developers of all kinds. And so being able to build that all out is where we're going. That's the future. And so now we're going to talk a little bit about the product roadmap precisely. So the very first thing that we're going to do with respect to the product roadmap is we're going to be bringing more ads and prizes into Zio. So Zio has dozens of teams and leagues and partnerships that they're already working with. Professional teams from, they've worked with everyone from the Cowboys and the 49ers to the Yankees to the Golden State Warriors. It's a huge list of teams and leagues that have used parts of Zio or all of Zio and have found that it drives additional engagement. We're going to be bringing prizing to that platform. We're going to be bringing rewards to that platform, just as we did for the Canelo Saunders fight, now writ large. Being able to work with brands like Keurig Dr. Pepper, as we did for Canelo, being able to take that kind of functionality and really roll it out to all kinds of partners, all kinds of brands. So that's step one. Step one is being able to bring ads and prizes to Zio. Step two is growing Zio itself. So adding to the number of teams, adding to the number of events, adding to the number of music venues and festivals, adding to esports, being able to talk about a larger group of teams and brands and leagues that are using Zio is going to be a really important part of what we do. So those are both going to impact the bottom line. One is going to be growing the number of people that are using it, and then this idea of advertising on top of it is going to grow the revenues and the margins that come from each incarnation. That revenue is actually going to not come off of the content partner. It's going to be coming through the brands that want to reach these audiences. So that's going to be, we're not raising our prices on the content partners that we're working with. We're adding new value, adding new functionality, adding new benefit, and as that comes in, also finding new revenue streams from other partners. So that's going to be an important part of that. The next big piece that we think is worth talking about is a shift to first screen, what we call first screen. So first screen is whatever you're watching your show on. So the television, the computer, the first screen is this stuff, right? So the first screen is this piece here that shows where the questions are, that shows where the polling is. This can also work along the bottom in the chyron in the bottom third. The idea is that we can start to include first screen, and first screen here is everyone from streamers to broadcasters, and that actually is a huge, gigantic user base. It is a very difficult to reach demo. The demographics of people that consume streaming are notoriously sort of skeptical of advertising and not super excited about giving up their private data and don't really like watching things that they don't like being forced to watch things. They don't like being forced to watch pre-roll or commercials or anything like that. And so we unlock that in really powerful ways for broadcast partners, OTT partners, and broadcast television. That's a huge growth area, right? Being able to talk about that space, getting onto the first screen increases adoption. Getting onto the first screen increases transaction rates. Getting onto the first screen changes how people are engaging with the second screen. So when you start talking about things like the Nielsen study that said that 88% of people are on their phones while they're watching TV, and the Facebook study that was very similar but came back and said that there were 95% of people were on their phones while they were watching TV. Like, it's a huge number. And so being able to integrate the first screen experience with the second screen experience, not just to try to drive people to an app, not just to try to drive people to a website, but to be able to truly integrate the first screen and the second screen experience, whether it's a live event, whether it's a sport, whether it is, any type of first screen experience that can, a concert, a conference, the idea that can be seamlessly and effectively integrated with your phone. And then we can talk about sort of the next step up. So you can see the power of the first screen. You can see the power of growing Zio. You can see the power of this kind of integration. Next up for that is to add new systems to bring in brands. So the important thing here is that we have to make this experience a good experience for our brand partners. And not just brand partners that dominate the advertising landscape, not just the AT&Ts and the Cokes and the Procter & Gambles. Those partners are going to be massively important, hugely important. We want them using this. But we also want to build tools that are easy to use for the entrepreneurs and the small businesses that are out there creating their own e-commerce shops, that are out there that couldn't in the past advertise on a Laker game, or couldn't in the past advertise in some of these massive live events because they didn't have the means, or because they didn't have, because the methodology was too difficult, because it was too hard to create sweepstakes. We want to make that easy for people that have their own Shopify shops, for example. We think that it's incredibly important to be out there arming those rebels and allowing those entrepreneurs to really thrive with new modes of advertising. We want them to be able to thrive with reaching the audiences that they want to reach and selling the products that they want to sell. We think that that's a hugely important part of our application. So building tools that make it easier to bring in brands, that make it easier for people to put coupons and rewards and products in front of engaged audiences. We want that to work just as easily for giant agencies and giant companies and for small apparel companies and the corner sub shop. After that, we're going to be working on growing the SDK and gaming products. These are the original Versus products. These are the products that are integrated into HP. They're integrated into the Men in Black game, that are integrated into fitness apps, that are integrated into games that we're developing with partners now that take advantage of our rewards software, of our rewards platform, growing the audiences that are using that, growing that user base. This is going to include not just games, but apps. In particular, we think fitness apps are really powerful. Fitness and health focus are a really nice match for what we're doing here. Growing that SDK base is going to be really, really important for the company going forward. And finally, growing globally. You've already seen press releases over the course of this year. At the end of last year, we moved into China. This year, we're going to be moving into the UK and Mexico and India. Adding more regions, adding more partnerships, adding more prizes, being able to use our system to understand the local issues, being able to deploy local pricing. Global pricing, very important. Local pricing, also important. And being able to understand the dynamic regulatory compliance issues of each region that we go into. That's why we spend so much time and energy focused on regional growth, is because it takes time to understand the local landscape, particularly as regards legal and regulatory. We're also going to be making sure that we are absolutely privacy compliant, GDPR compliant with the new laws that are being rolled out in various parts of Asia and in California and individual states that have privacy restrictions and privacy regulations that frankly ought to be there. Being able to protect user data is an important part of what we're doing, and being able to roll globally into new geographies requires us to be compliant with these types of rules. And we're really glad for it, frankly. I think it's an area where opt-in and choice and rewards-based advertising can really, really shine, because we're not selling the user as much as some other systems might. We think it's an important step forward in being able to offer a broader spectrum of advertising options to brands and to audiences. So growing globally is gonna be an outgrowth of that. So that is sort of the story of where we're headed. So you got to hear a little bit about, sort of where we came from, and then a little bit about the present, sort of where we are, and then a little bit about where we're going. Good stuff, fun stuff. And now we're going to talk a little bit about, we're going to do some of the Q&A. So we got questions from a huge group of people, and we've distilled some of them here, and I'm going to be going through them and answering them to the best of my ability, frankly. So question number one, can you go into more depth on how you make money? Sure. So we can do that. I'll talk about it first historically. So historically, we made our money, the vast majority of the money that we've made is through integration and managed services, which is sort of building bespoke software, making engagement technologies and making engagement platforms that are effective for our users, developing those and building those primarily with HP. You can look at all of our filings that show sort of where that all came from. But historically, we've made our money with integration and managed service fees. Excite, Zio, the Zio product, makes their money from direct contracts with teams and leagues and brands and the content partners that they are working with. We have a little bit of revenue that has come from advertising, but that's kind of the history. Going forward, we see three key streams. One is SaaS licensing fees, selling the combined Zio versus product, teams and leagues and tools that want to be able to access that on a per game, per event, per season, per year kind of basis. Those kinds of fees to be able to access this technology is certainly a part of it. The next piece up is production fees and managed services, building bespoke software and running these kinds of events. Although, as I said, that's particularly on the production fees side. If we show the back end of the system, actually, we can actually kind of tilt over and show the dashboard that the team is working on to actually run this show today. And what you'll see immediately, anyone that has done a lot of video editing will be able to see right away that it looks a lot like tools that you've seen from Adobe or from iMovie. The idea that you can do video editing here. We want to make these dead simple. We want to make them easy for broadcasters to use, not just broadcasters writ large, not just YouTubers. It's super easy to manipulate. As you hit those cards, it shows up in the timeline, and that's what changes on your phone. That's actually a pretty powerful idea, that's simple and easy and straightforward to use. So those production fees are actually not going to be a huge part of what we do. Some of the managed services, some of the building bespoke software we expect to continue to do going forward as particularly large partners want us to build particularly bespoke instances for them. We think that's going to be a part of it. But the production fees, for example, the Anaheim Mighty Ducks, shout out to the DJ of the Anaheim Mighty Ducks, who, while they are playing the music that appears and can be heard inside of the hockey games inside of their stadium, also runs their Zio platform simultaneously. So it's pretty easy to use, pretty straightforward. It doesn't take a whole long time to learn. And that's where that part goes. The last part of where we really think that the transformational nature of Versus is going to be really seen is in the rev share, the transaction-based revenues from advertising placements, being able to do the rewards, being able to do the display, being able to do the integrated and performance advertising. All of that will be split with the content partner that we're integrated into, whether that's an app or a stream or a broadcast. those ad dollars are where we expect over time. That's where we expect the lion's share of future versus revenues to come from. Is the engagements that are baked into the ad units. So I hope that answers that question. Next question: what makes dynamic regulatory compliance unique and proprietary? So first, let's talk a little bit about what dynamic regulatory compliance is and what it means and what it does. We talk about it a lot internally. The idea is that we can build tools, and this is actually sort of one of the fundamental underpinnings of Versus systems dating back from the dawn of Versus. The idea that we can take a few pieces of information that are opt-in. We know about the game. We know about the skill level of the game. We know about the location of the game. We know about where it's being played and what it's, we know a few things about the game. We know a few things about the prize. We know a few things about the player. And by combining those, we can run those through our system and be able to only serve up prizes that you are eligible for in your particular region on that particular game. Being able to dynamically solve for regulatory issues is an enormously powerful thing, not just for the big partners that we're with, but as I said, with small partners, being able to roll out sweepstakes, being able to roll out contests, and being able to and prizing and rewards and advertising. All of that is having to navigate a huge and complex quilt of state by state, province by province, country by country, legal and regulatory issues. And dynamic regulatory compliance is how our system can solve for that. And the way that matters in a business context is that not only does it open the aperture of businesses that can work with us, right? Because previously, sweepstakes were kind of the province of only a few companies, right? And they were also the province of only very, very large prizes, right? You wouldn't ever do a sweepstakes just for a hat or just for a $30 prize or a free pizza or something like that. You would never create all of the legal and regulatory architecture that's required to do a sweepstakes and then kind of use that on a $20 prize or a $50 prize. But we've had tremendous success with engagement in prizes in that range. We've had tremendous success with how much people want to win things that matter to them right now, right? Not that it's going to be, a 6-month cruise or some sort of trip around the world, or, those are great prizes and great rewards and great sweepstakes, but being able to broaden the spectrum of what can be included in a sweepstakes, what can be included in a contest, what can be included as a reward, also increases the number of partners that can join a system like Versus. That can sell their products through our platforms. So that helps there. The other group of people that it helps is that it makes our products more relevant. All the stuff that we do with dynamic regulatory compliance to make sure that you're obeying, Illinois law versus Tennessee law versus Shanghai versus Toronto, can also be used to do geo-targeting and relevance work around rewards that make the reward matter more, right? It doesn't make a lot of difference to me, as delightful as Tim Hortons is, getting a Tim Hortons coupon or getting, free Timbits or whatever doesn't really benefit me in Los Angeles because there's not a Tim Hortons within 1,000 miles of here. Whereas, winning In-N-Out really kind of does. There's one across the street, and, thankfully so. And it's something that I can take advantage of, and I'm far more likely to actually engage with. I'm far more likely to do. I'm far more likely to turn in. When you look at our history, one of the things that's really, really, really powerful is the transaction rate. We talked about it a little bit earlier, but this idea that when you win something, you're actually going to go out and do it. We had an instance with a campaign with White Castle where 36% of the people that won walked into a White Castle and got their cheese sticks. And every one of those people got a Coke. And every one of those people got a sack of burgers. And the return on ad spend was right there in the first purchase, the very first time, not having to extend it out into the future. The people that walked in bought something and it was trackable and we knew it, and it was great because they spent this much in ad dollars and they got this much out in revenue, and this number was bigger than this number, and it's great. And being able to do that more frequently, and the transaction rates that we're talking about, historically we've talked about transaction rates that are measured in hundredths of a percent or tenths of a percent, and we're seeing multiples of that. We're seeing full percents, and in some cases, in some campaigns, you're seeing huge click-through rates and email open rates and transaction rates that dwarf other things. And that comes from choice, and that comes from earned reward. And it also comes from this idea of dynamic regulatory compliance. It comes from this idea of being able to precisely identify the relevant issues, legal and regulatory issues, but also the issues that confront our consumers every day. Cool. Next question up. Where do you see the biggest growth areas for the company? And what about the health and fitness sector? I love the health and fitness sector. The health and fitness sector looks a lot like games, if you think about it. It's got delayed gratification elements. It's got growth elements. It's got win conditions. Did you, lose the weight that you were hoping to lose? Can you run faster today than you could a week ago? Can you swim farther? Can you do this thing? Can you fit into these pants? These types of things are win conditions, right? They're win conditions just as much as beating level 50 or, killing the big boss or, betting on the outcome of the NBA finals. Those are all win conditions, and or playing in the NBA finals. Like, an achievement that can then be prized is at the center of Versus. That's the reason that this technology works. And so to that end, health and fitness have a lot of these goal-oriented, win condition-oriented paths, and we think that space is great. The biggest growth area for the company at the moment, and the thing that we're really, really excited about, is the growth of Zio. It's streaming, it's broadcast media, it's being able to put this in with OTT, it's being able to put this into the $500 billion television and streaming market. That is an area where we really feel like we can do a lot of damage. But we really like the health and fitness sector, the app sector, the games. We really like that whole space. I hope that answered everybody's question. I hope that gave you what you needed. And the next question is, how did the Canelo fight go? Canelo fight was awesome. Good. Answered your question. Great. So the Canelo fight was great. It was a small test. We worked with Frias Agency. We worked with Keurig Dr. Pepper. Over 1,000 fans won prizes. The transaction rate on that, on the DAZN part, was over 60%. The people that won stuff then did it, right? You win it, you love it, you remember it, you recall it, you engage with it, you get excited about it, and then you go buy stuff, right? And we saw that. We saw that happen in the Canelo fight. Crush 2 liters, DAZN codes. Like, it was a great engagement for us. It was the very first time that we'd worked with Frias. It was the first time that we'd worked with Keurig Dr. Pepper. It was the first time we'd worked with Canelo Alvarez. It was the first time that we had really rolled out and done Zio. And I thought it was extremely successful. And we're looking forward to doing more work in that space going forward. I think tests like that and then growing that space is really powerful for us as sales tools, and just fun to watch the fight. Cool. Next question up. We see that Wasatch is now a filing shareholder. How are they involved? Wasatch is a great investor. Wasatch has a long history of growth investment. They have a long history of long-term investment, investing long-term, and they've taken a long position in Versus because they're bullish on our future, because they see the same thing that we see, which is that this kind of technology is transformative in a very big space. Because of the size of their position, they're required by the SEC to file a disclosure per Section 13, and they're a delightful investor, and we're glad to have them on board. Next question is, how much money are you going to raise, and when are you going to raise it? We're not raising money. We've got, as you heard Craig talk about, our cash position is so much better than it's ever been. We're so much better positioned than we've ever been positioned to be able to scale, to be able to grow, to be able to put the team in place. And at this point, I would thank Amanda Armour for all the work that she's done building out an incredibly powerful and diverse team. Thank Yuli and Christian and Laura and Josh and Alex and the whole team at Versus that is building this company for the future. And I think that we've been very, very thoughtful about who we hire. I think we've been very thoughtful about who we bring in. We're excited to bring some more people in the near future that are really going to move the needle, people with really incredible experience in ad sales and in media to grow out the Zio product. We're really excited to bring on the whole team at Excite. Great product development, great production, being able to do live events, being able to bring that functionality, being able to bring everything from AR development to mobile development to web development to product development, and being able to run live events at a scale that really isn't available anywhere else. Being able to add that to our team, we're absolutely thrilled for that. But we have the money to do that, which is great. And so the question of, how much money are we going to need to raise? When are you going to raise? We feel like we're in a position of strength right now, and that can change. It depends on how acquisitive we want to be. If we find some partners that we think might make more sense inside of our tent, if we find that there's a growth area or a scale area that we need to scale faster, grow more, if there's an area that we need to throw some resources at, that might change. But right now we've got some money in the bank. We've got some warrants that come due this summer. We've got some more warrants that come due in January. So there's a version of this where we don't need to raise money. We've got a good thing going. If we do end up, it'll be because of a specific target that we want to reach, and that capital will help us achieve it faster. So right now we feel pretty good. Next question. When are you going to get to break? When are you giving guidance? When are you going to get to break even? As far as guidance goes, we've wanted to wait on forward-looking revenue guidance until we can start to predict a couple of quarters in advance. We want to be able to set targets. We want to be able to reach those targets. We want to be able to exceed those targets. We want to be able to be within tolerances a huge percentage of the time. And I think it's been really important for us to be able to grow in the way that we're growing. I think that we're really excited to bring on Zio. We're really excited to bring on the steady, regular revenues that they've been able to generate. We're really excited to bring that into Versus, to have more people that use the products on a regular basis and so generate regular revenues for us. But we've been waiting on giving forward-looking guidance until we can sort of predict some of those revenues. And so it's coming. It's just not here yet. I will say that our goal is to hit cash flow positive run rate in 2022 on a month-by-month basis. We'd like to start making more money than we cost over the next 12 to 18 months. So that's where we think we're going. That's the plan. And we've got a path to that. We're very excited to bring in Zio and to roll out some of our functionality, to add some of the advertising, to grow the SDKs. Some of the stuff that I talked about earlier with respect to where the product roadmap is going, I think is going to translate very cleanly into not just revenue growth, but revenue predictability. And the revenue growth and the revenue predictability is going to be when we start offering guidance. And then, after that, we're hoping to then start hitting guidance targets. That's the plan there. Oh, nice. So this question is, why is it a more effective ad? Well, it's a more effective ad because of all the things that we've been talking about for the last hour and 4 minutes. It is a more effective ad because of choice. It's a more effective ad because of earned reward. It's a more effective ad because of interaction and engagement. It's a more effective ad because it doesn't feel like an ad, right? It's a more effective ad because it's a prize. It's a more effective ad because it's a game. It's a more effective ad because it is appealing to that part that's in all of us that wants to compete, that wants to earn, that wants to win things, that values things that they earn. That's a powerful part of the story. That's why it's a more effective ad. You're going to have an affinity for things, and you're going to remember things that you learned about. Like, for example, today we learned about the protein content of weird animals, right? So actually, if we bring that question back, now I would expect people to be able to answer this question differently than they did when it started. This is the question that we asked at the very beginning. And being able to see sort of where where people grow, where people change. I think one of the funny things about advertising, there's an old joke that 50% of advertising works, but nobody knows which 50%. We all have jingles in our head. We all remember ads from our youth that had catchy tunes. But the reason that they were catchy in part was because we were exposed to them over and over and over and over and over and over and over, whether it was a tagline or a brand logo or a song. We just got hit again and again and again and again and again, even subconsciously, even subliminally. But when you're playing for stuff, when you're learning stuff, when you're engaging with stuff, when you're touching it, you remember that the rat is the right answer, right? You remember that the rats are bigger, right? You remember that the rat is you remember stuff when you engage with it. It unlocks you in a different way. Rat was fourth when we first asked this question, and now it looks like 86% of people got the right answer. You also won't forget which one has more protein on a pound for pound basis, right? You won't forget that either. So if we switched up the question and rolled that question out, you won't forget that one either, right? You're learning. And you got one exposure to it, right? Like, you're playing for something you care about. You're remembering what you did. You're remembering the moment, and you're engaged with it in a way on your phone and on the first screen and on the second screen in a way that works. That's why this is a better ad. You're also going to be more likely, frankly, to buy tickets for your favorite superhero movie, or you're more likely to be able to buy their lunchbox or buy their comic book. You're more likely to remember. You're more likely to go out and do. You're more likely to go out and buy. You're more likely to go do those things because what we're going to send is a targeted favorite superhero coupon delivery. All those movies are coming out in the next 18 months, and being able to show you an example of what we can do to do upsell, to do cross-sell for brands that have, for companies that have IP that crosses multiple boundaries and multiple borders. Companies that have, comic books and also TV shows and also movies and also want to sell CPG. This type of technology is ideal. We came from those kinds of companies, myself and Kayvon Paymani, and like a lot of our team has come from companies where upsell and cross-sell and moving people from one type of media to another type of media, moving people from comic books into products, into books, into experiences, into theme park rides. It's hard, but being able to know what people like, being able to personalize the contextual nature of the experience, the interactive nature of the experience. That's why this works. That's why Versus Systems makes the best ad unit in the world. That's why this is going to be successful. So to wrap up, you're talking about the game within the game. Remember that we benefit everyone in the system, right? Content partners get more engagement. They get new incremental revenue, new ways to reach out to audiences, whether it's at upfronts for ABC, or it's for the NBA Finals, or it's a Twitch streamer rewarding their fans. Brands benefit too. They get better click-through rates, they get better brand recall, they get better brand affinity. People are just more likely to buy things that they like and things that they've earned and things that they've won. And audiences win too. Audiences get to win real-world prizes that they care about while playing their favorite games and watching their favorite shows and learning about a new show at upfronts and doing an exercise app and crushing candy and following their favorite streamers. All of those things also, they're already engaging. They're already fun, right? Like, it's already hugely valuable. And in terms of your time, the investment of your time to follow your favorite team or your favorite streamer, to watch your favorite show, like, those are cool and valuable things. It can become more valuable and more engaging with the introduction of prizing and with the introduction of supplementary content, with the introduction of, trivia and social walls and being able to talk to each other and being able to bring these type of community elements into the content. Audiences win too. So speaking of audiences winning, let's go to the leaderboard. And remember, we're giving away five things that are going to go to the top 5 people on the board are going to go get whatever it was that they chose at the very, very, very beginning of this thing, whether it's a pizza or a coffee or a stylish versus sweatshirt, the idea that we can reward these prizes out to you is only a part of the engagement. All of the rest of the stuff that you did when you're answering questions, if you're seeing if you got stuff right, it's not just the prizes that make it work. It's all of the engagement elements that make it work, but the prizes are nice. So the top 5 folks on the board are going to be texted. I think we're going to be texting those top 5 and getting in touch with them and making sure that we deliver the prizes that they have rightly earned by sitting and listening to me for quite some time. We build the best ads in the world. We have a great team. Thanks again to everybody that helped to put this on, to Yuli and to Christian, to Craig, to the team that helped us, that shot the video and ran the board and did the whole thing, and to everybody that's working from their home offices this year and from our office in LA and from all over the country wherever Versus and Excite folk may be. Thank you very much for your time and for your energy and for your effort. Thank you for getting on board. And we said at the start, if we can make content just a little bit more engaging, just a little bit more fun, then people will watch and people will play and people will remember. And then they're going to go buy things. And today, we hope it was fun. You watched, you played, you remember, and now you can go buy some things. And speaking of things that you can go buy, Versus shares are available with the ticker symbol VS on the NASDAQ. So thank you very much for taking your time to spend with us today. Thank you for coming to the first ZO and Versus powered Investor Day. Let's all go win the game within the game. Thank you.